Hello everyone, welcome to my channel. Today I'm going to talk about record keeping tips to keep the IRS away. Before I get into the video, be sure to subscribe and leave a comment below saying I subscribed. I will try to personally reply to your comments. With the ever increasing complexity of our tax system, it is commonplace for many small businesses to make mistakes with bookkeeping and filing. One way to avoid making errors is to be aware of the most commonly encountered pitfalls. Here are some tips to help keep the proper records. First thing, receipts. Even though the IRS does not require receipts for business and meal expenses of less than $75, it is nevertheless wise to hang on to them. There is no better documentation than a credit card receipt since it has all the expense information required. All you need to do is write on the slip the purpose of the event, the individuals you were with, and your business relationship with that person or people. Next thing is auto deductions. Generally, small businesses use either the actual expense method or the optional mileage method of deducting the business use of a vehicle, and both must account for any personal use of the vehicle, including commuting. When using the actual expenses method, the deductible business portion of the expense is determined by multiplying the total expenses by the percentage of business use, which is found by dividing the business miles driven by the total miles driven. When using the optional mileage method, the business miles are multiplied by the IRS published standard mileage rate, which is 56 cents per mile for 2021, down from 57.5 cents per mile for 2020. So regardless of the method used, make sure you keep track of the total and business use miles for the year, since it is required for either option. The next thing is gifts. Do not overspend on gifts to clients and business associates. The IRS will allow a deduction of only up to $25 worth of gifts to any individual per year. Being too generous will cost you, with only that first $25 per recipient considered a deductible business expense. The rest will be non-deductible. For deductible gifts, be sure to keep a copy of the purchase receipt and note on it the business purpose for making the gift or the benefit you expect to receive, as well as the name of the person to whom you gave the gift, his or her occupation or title, or some other designation that will establish your business relationship to the individual. Business equipment. Since equipment is considered a capital expenditure, it has to be depreciated. That is why lumping equipment together with supplies is not a good idea. This is true even when you elect to expense equipment purchases under Section 179 or claim bonus depreciation. If the purchases are not reported properly, the IRS could rule that the expense was improperly characterized. If that is the case, you would not be entitled to the deduction claim on your return. There could be other repercussions, leaving you with no current deduction at all. Ordinary and necessary. To be deductible, an expense must be ordinary and necessary. An expense is ordinary if it is customary and conventional for the taxpayer's line of business. A necessary expense is helpful in the taxpayer's business, but it need not be indispensable. Meals and lodging. When traveling for business, lodging is 100% deductible, but the away from home meals deduction is limited to 50% of the cost. So if the meals are charged to a hotel room, they must be accounted for separately, and keeping a copy of the statement from the hotel that shows the charges as well as a credit card receipt or other payment receipt is advisable. Entertainment at sports events and theaters. Entertaining customers at sporting events and theaters is commonplace, but as a result of the Tax Cuts and Jobs Act, which became effective in 2018, a tax deduction is no longer allowable for entertainment expenses. However, the Act did retain a deduction for business meals that are directly related to or associated with the active conduct of your business. The term directly related means that actual business discussions were conducted during the meal and you anticipated a specific business benefit from the meal. The term associated with is more liberal and includes meals either preceding or following a bona fide business discussion. In either case, the business deduction continues to be 50% of the actual expense. Also remember that business meals must be documented, including the amount, business purpose, date, time, place, and names of the guests, as well as their business relationship with you. However, for 2021 and 2022, the cost of food and beverages provided by a restaurant as a business meal is fully deductible. Home office deductions. There are two methods for deducting the business use of a home. One is the conventional method of prorating the expenses, with some limitations, of the home by multiplying the allowable expenses times the business use square footage divided by the total square footage of the home. The other method, referred to as the simplified method, allows a $5 per square foot deduction, maximum 300 square feet, without having to keep records of expenses. Both methods have the same eligibility requirements. Thanks for watching this video, and do not forget to subscribe to my channel.